everybody, welcome back to Royal Blu FX. In today's video, we're going to talk about how we draw out our entries versus others in terms of how they draw out their entries. Okay, so in this video, I really want to focus on the entries because a lot of us tend to identify the entries based on an order block. Okay, so in this video, I'm going to be very specific about our entries. Okay, so let's begin. So first things first, I want to draw you guys an example, okay, of how we draw our entries out. And what we see first, okay, when we're looking at our entries, we are identifying, let's just say price is going bullish in this example, okay? When price is going bullish, there's a break of structure. What we want is for price to come back to the demand zone, right? And in and around this area is where we will be focusing on the entry. Now, this is probably a bad example. Let me just do this. It's probably be a lot more better if we do that, right? And then we can just maybe this way. We can do this, this, right? Price extends, then price comes back, right? So what I want to focus on is essentially a supply and demand zone. Okay, in order for me to actually identify my entry point, I need to identify my supply and demand zone. Okay, so where is that exactly? That would be right at this high that you see over here to this low right here, and I would expand that out. Okay, now just a little background as to why I do this. Okay, the reason why I do this is because a lot of times a lot of traders would focus on a order block, something down here, right? Somewhere right down here where we can't really see, right? I mean, you can see it probably, but it's most likely an area, hold on a second, right over here, right? Let's just pretend this POI, no, not even that. Let's just draw the order block, okay? So the order block will be somewhere in here, right? And so what's happening is a lot of traders focus on this one order block, right, which consists of one candle, right? So they're looking at order blocks as a candle basis, not as a move basis, okay? So let me explain. When I'm looking for my entries, I'm looking for the last area where supply or demand has been taken, right? The last supply was here. You can see that there's a high, there's a low, there's a high, and there's a low, right? So once I identify my last high and my low, I mark that out, the entire area. Now, if you think about it, what is a supply zone and a demand zone? It's essentially multiple candles in between a high and a low, right? So there's going to be multiple candles in this area. Now, mind you, this is terrible. The drawing sucks here. Anyway, we'll just say each of this is a candle, right? Right here, okay? So we have price going bearish, right? And we have price going bullish, right? So we're going to also have candles going bullish as well, okay? But what we're really focusing on is the last supply to demand, right? And that's how I am able to draw my entry, okay, or my entry area, my entry zone. As opposed to other traders who follow or at least look at where their last candle is on the low right here on this demand area, right? And then they say, okay, that's my order block, right? Now, there is some right and wrong to this, okay? Because not everything is 100% correct in the markets. Not everything is always going to work, right? In terms of entries, in terms of supply and demand, right? So with having said that, the only reason why I try to identify my supply and demand, right? When I identify my supply and demand is because what I'm doing here is I am trying to raise the probabilities of me actually having to find where price is going to go in the generic zone, so that way I can actually pinpoint where price is going and then executing right when price comes back into that demand or supply zone. Okay, what do I mean by this? So I'm talking about personally, right? When you mark out your supply, right, and I want price to come into my say my demand zone, right? There's a lot of times when price may not reach the 50, right? So let me just explain here. There is the 50, right? If I go from this low or from this high to this low, just like this. And I always mark out my 50, okay? I always look to target the 50 EQ. The 50 EQ is this middle line here. That's the 50% equilibrium line, okay? And the reason why I do that is because I want price to come into the 50 EQ because generically speaking, and more times than not, a lot of trades do get off or do take off from the 50 EQ. Okay, this also has a lot to do with sort of managing my trade, managing the entry, right? Rather than having early entries like this, right? When price retraces, it comes down to the outer part of the zone, right? And then at times it does release, right? Now, this to me is a break and retest trade. So when price breaks the high, price runs, comes back, and then it retests, right? Which in my case, since it's a break and retest, it is also a type of inducement when price goes like this and then continues bullish, right? This is an inducement. And the reason why it's an inducement is because price didn't really tag the demand zone, right? It's just surfacing above the demand zone. So in this case, I want price to come into the demand zone, right? So if price actually continues to come into the demand zone, now we have a better shot and to claim this as an actual area where price is actually mitigating this demand zone, right? So there's two ways I can enter this. Either price is going to come into the demand zone like this and enter the zone, right? Or price is going to come and reach the 50. Now, there's a lot of times it's always 50-50 with this, right? Price can reach the 50 and also continue, right? So in my eyes, I never see this area here where price is breaking and retesting and acting as inducement as a type of entry. However, price can always release, right? Continue like this, right? And we've seen it multiple times where price just comes to the zone and continues, right? But there's other times when traders look to further in, right? Look for price to further into their order block, right? And then continue bullish like this too, right? Now, there's a huge chance price sometimes never actually taps the order block. And there's a lot of that, theory that everyone's saying, well, or maybe realistically, this factuality where people are, traders are saying, well, the market never tapped my order block, or banks never came to my order block, or whatever, and the part about this is because a lot of the times it's because we're over refining the order block. Okay, we're over refining the order block, or we're over refining an area, generic area where we want price to come into, right? So rather than over refining or refining an order block, right, and waiting for price to get to the order block, I want, in my perspective, to generically generalize where the zone is, right, where price will come to, right? That's not to say that I'm just going to enter as soon as the 50 where price comes into the 50. I obviously need to wait for price to switch bullish, right? For price to tap the 50 and then continue bullish, right? So one of the confirmations I always look for is when price gets to the 50 is to actually get confirmation, right? That's step number one. The confirmation is tapping the 50. Step number two is waiting for prices to exchange, right? And show me some bullish momentum, right? And then continue, and then look for the entry and then continue, right? So that's the simple, that's the the shell, the nut in the shell. What's the word called? Well, that's everything in a nutshell. That's what I'm trying to say. I hope I don't become a meme on this. Anyway, so, but however, I have two ways to do this, right? If price gets into the zone and actually touches the zone, I can still look for prices to exchange in here. This is still an area where I can say to myself, okay, well, price can also exchange in here inside the zone. It may not have tapped my 50, right? But it is tapping the zone. And there's a huge likely chance that price could still run like this, right? We've all seen it. So price either has a tendency to come to the outer part of the zone to continue. It also has the tendency to come inside the zone to continue, and also has the tendency to come into the 50 and continue. And other times it has the tendency to come to the order block, right, to that one little order block that everybody looks for and continue, right? All of it is possible and probable, right? The idea behind this, okay, is that the reason why I don't over refine the orders blocks, obviously, is to give myself the higher chance to enter in, or at least to look for prices to get into that 50 or below the 50, just so that way I can have better chances to obviously strike and enter in. So I don't have that fear of missing out, thing, right? So I hope you guys understood this example, right? Now, obviously, the order block can be anywhere up here, wherever, right? Sometimes it's up here, whatever. You know, sometimes it's in the 50. It doesn't matter. What really matters is how to identify that supply or demand zone, because the supply and demand zone is, in a sense, my order block, right? Now, you could also highlight the whole entire high and low as well, just like this, okay? Because at the end of the day, one of the things you guys need to understand is when we see a supply zone, right, that consists of multiple candles inside of it, that is an order block on the higher time frame, right? So if this was my 4 hour, maybe on the monthly or weekly, this would be just a candle dropping and price running, okay? So that's another an idea that you guys can see this, right? But also you can see that there's a high and there's a low there, which means that you can also highlight the whole entire zone just like this, okay? And then wait for price to get to the 50, right? That's also another area for price to get to. Now, why do I want to do this? Again, actually, not even again, because I didn't even talk about this, but if price gets down into the 50, what do you know, what do you see here between the low and this high, right? What is this considered in this, right? What is this considered? This is considered to be the discount. This is the premium, right? We never want to be taking entries essentially in the premium, right? Although price can get into the zone and then continue again, right? We always want to refer to the discount, right? Because this is where prices are being bought at the best price, right? I don't want to be buying or entering at the, you know, highest price or the at the highest price or the higher price here, right? I want to be buying price at the perfect price, at the lowest price, obviously. So this is that conception, that theory as to why I always use the 50% EQ, right? And why I draw my zones the way I do as far as an order block, right? Now, let's say again, price gets to the 50, right? And price starts to switch, right? And then I can also still use this again from the high to the low, right? And this would be my internal entry point, just like this, right? And I can just go in here, right? Wait for price to get back in here, and then continue to control my risk like this, right? And then enter as soon as price gets into the 50, right? And I don't have to think about it. There's no nonchalance about this. I just enter in as soon as price enters the 50, okay? A lot of this is playing supply and demand, right? So what we're expecting for this high is to see multiple candles inside this supply zone, okay? Terrible candle drawing here, right? It's just circles, obviously. But anyway, you guys get the picture. Multiple candles in this supply move, right, when price runs bullish like this, right? And then that's when we span it out, wait for price to get to the 50, and you enter, right? So that's really the gist of how I prepare for my entries, right? Now, let me show you guys. What does that mean? Let me show you guys on the real time frame, okay, and the real charts, and see how this looks like. Okay, so we're on gold. I'm gonna cherry pick because you know, just to make this obviously more easier for you guys. Let's go from here. Now we see there's a high, there's a low, and this is a low, and this is a high, right? Price came in here, mitigated this, right? Now let's go from here, right there. Okay, I'm gonna expand this to the right, okay, like that. Now, why did I pick out this high here, right? It's because this is the last supply to demand, right? A lot of people would come in here and say, well, that's my order block right there, right? They would do that, right? Well, I come in and say, well, this whole area is my order block, essentially, right? So in essence, I wait for price to come to the 50. Look where it came, to the 50, right? And that's where we're going to be looking for entries to continue price bullish, right? So let's go and let me cut this market in half, right? Let's go all the way down here. Okay, so if price got all the way down there, right, I'll go down to the 15-minute, right? You can see price tap the 50, right? And then I'm going to wait for price to switch up. Right here you have your supply, right? Price runs up, comes back down, and then there's another buy. Now you can see here, I don't enter on chalks a lot of the times. I wait for price to actually show me. I mean, I could enter off a chalk, but I don't look for chalks. I look for weak supply, weak demand. Okay, so, and here you see supply, right? And you see more supply. So we have weak supply here, which means demand took over, which means supply is weak, and then we'll be looking to enter from the weak supply. Now, let's go in here. So once price ran the high, right, this is where I go. I can go right here. Now, notice here, I went from this high to this low, right? There's your supply to demand to supply. This is your last supply that also consists of multiple candles right there. There's 1, 2, 3, right? Or obviously you can generalize the whole area just like this. You can also do this as well, right? And notice how price actually can be tapped to the 50, right? But at times when you see highs and lows inside of a main high and a main low, I'm talking about this specifically. When you see a high and a low, right? But this is an entire high and a low, right? A major high, major low, right? And you see a high and low and another high and low in there, then you can just go and mark the last supply zone essentially, like this, right? And then you can just do this, right? Just like that, right? Now notice how price comes into the zone right here, right? Would have I entered this? Maybe I would probably look for prices to switch up and continue, right? And however, in our courses, obviously we teach how when price gets into your supply or demand zone and how to avoid trades like this, because this actually price didn't actually tap. If you look at the line chart, look where price closed, right? It didn't close inside, it closed above, right? So this to me would be irrelevant, right? However, there are times when you can catch entries based off of this. If you can see, there's your weak supply, strong demand, right? That means this area, I'm going to generalize it right there, right? There's my weak supply, strong demand. There's my 50 right here. That would have been the entry, right? And price broke the high. I would have been a broke even if I entered, say, here with the risk below the zone, just like this, right? And then continue to target the high, wherever that may be, right? So this would be step number one, right? So I could have done that. I would have made money, right? Let's continue here then. But here we are at the main supply to demand. Notice how price comes into our demand zone here, right? And it taps the 50, right? So what do I do in here? I could enter here aggressive if I wanted to, right there, right? Risk right below. And then we can look to target the high, right? At minimum here, not really at minimum, but if I'm looking at the 4 hour, I would probably target the main high. So at minimum to target this high here, right over there. Okay, I'm not going to talk about how to target and stuff like that. I'm just obviously rambling on, just to show you guys how this works. Okay, something like that, right? Let's go down to the 30-minute, right? Let's see. Sorry, it was the 15-minute right there. Put my risk just a little bit below, right? Maybe about 2 or 3 pips below, right? And the reason why I want to enter from the 50 again, you guys, is because this actually reduces my risk of losing the trade, right? I'm actually trying to get the trade as low as possible, right? And at the best price, and then working my way to the top, right? You can see this is premium. This in here is discount. So let's continue from here. I'm going to go drop down to the 3-minute, possibly even in the 1 minute, actually. Let's go down here. And now what I want to see here is I want to look for my last week's supply. Okay, I already see it here. There's your high, right? From this high to this low right here. Right, that's your last supply zone. The supply zone actually did its job by breaking the low, right? And so that's our last supply. Now I have to spot where my weak supply is. My last weak supply is right here from this high to this low, right there, right? So now that I did this, right, and price broke the high, right? Look what price is doing. Price came in here into this demand zone, right? Back into our 50, right? And into the discount, not the premium, right? So as soon as price taps, right, this is what I do, just like this, right? I enter as soon as price taps that 50. Now, let me just control this previous one right here, okay? So I can enter there aggressively the way I mentioned, right? Or I can wait for the 1 minute as well, which is this chart. I can put my risk just a bit below, just to protect the trade from from price getting stomped out, right? Just in case. But in any case, we did our due diligence, and we're looking to target the main high here now, right there, right? So let's continue from here. And then once we enter, right, we'll say some prayers, right, before we enter there, right? There we go. Okay, so obviously once price is moving from here, you can keep stacking, right? You can see there's your sell to buy, right? That's your weak supply, strong demand. Right below here would be the same thing, right? You could do from high to low, just like that. And then once price breaks the high, comes back into the 50. There's your entry again, risk below, right? But we're just going to go with the one entry just to show you guys obviously how this works. Let's go to the 15-minute and we'll continue playing, right? So let's see what happens. Right, there you go, guys. So that's how this would play out, just like this. Right, and then as soon as price is running, of course you can keep stacking trades, right? It's the same thing. You know, and I'm always hunting for the 50 EQ, obviously, right? Let's see how this plays out. Okay, didn't quite reach up there. Let's go over here. Right, it'd be something like that. Maybe let me see what I did. It should go up, continue to go up from here. Anyway, you guys get the idea, right? Let's go on the 4 hour. Right, so this is what it looks like, right, on the 4 hour. Look at that. So this is where I looked for the 50 to be tapped for price to run bullish, right? And then, sure enough, price never got there. Oh, well. Oh, there we go. After millions and millions of, a lot of days, excuse me, weeks and weeks, right? So right here, this would have wanted to tap us out. Would have it tapped us out. Now, there you go, right? You're close to the profit, right? But price would have come and tapped you out. Now, obviously, you can play this safely, which is, you know, following each high, right? Following each supply and demand, seeing if price will get to your target. But in a essence, right, this is a win, right? Even the big one too, right over here. This is the one that we wanted to enter aggressive from right down here. Let me see, where is it? Right there, right? This would have also been a win, right? So, boom, there you go, right? Right to your profit, right there. And like I said, guys, everything is still the same way. It's all the same way, the way we play it out. Let's go look at another example, maybe just kind of quickly because I know I'm running over time. Maybe we can look at something small. Let me see over here. So right over here we have a supply, right? There's your supply. There we have weak supply, and then I'm going to look for a strong demand, right? We're going to see price rising here. I can automatically see here weak supply, right? Look what I do. I go from the high to the low, right? Notice I don't go in here and say that's my order block. That is my whole area. That's the whole area I'm looking for, right? So I'm looking for price to tap here, right? You can enter here now because we have weak supply, strong demand coming in. You can see demand has been in charge, right? And then so far in here internally, you can see weak supply, strong demand, right? So this would have been another entry for me right here. Let's continue, right? There we go, boom. There we go, boom. Just like that, right? And minimum target this area here. Now, vice versa, I would have also another 50 EQ on the opposite side, just like this, right? And look what's happening here, guys. Boom. The 50 EQ was tapped again, right? Now, is it going to happen like this all the time? No, but obviously play with this, backtest with this, and see how price reacts to the 50 EQ. It happens more times than not, about 50% of the time, I would say. But this is how I've been doing it at everything, right? I find out where the direction is, right? The direction is bullish, you can see. What I'm spotting for is weak supply. And then marking that out from high to low, right? This is weak supply. From high to low, not like an order block like that or like that, right? And then I wait for price to come back into it, and then I go look for it. And then I look for the go down on the lower time frame, do the same thing, right? Because everything is fractal. So, all right, guys, I hope you guys understand what I was saying. If you guys really like this video, please throw a huge thumbs up and like this video, obviously, and subscribe to our channel because we just always release great content. Until then, you guys, I will see you in the next.